Welcome to Charts Today. My name's David Linton, and today's edition for Monday, the 24th of December, Christmas Eve, comes to you from London. And the US stock market had a terrible week last week in the end. It was the worst performance we've seen for 10 years, and we see that big weekly candle there on the S&P down 7%. The Nasdaq was down 8%. And the Dow Jones was down 7%. So we've seen some really big falls in the market, and that's going to just be the point really where we've seen the breakdown in prices, and so that's going to hang over us. And so the hope for Santa rally, it's hard to see at the moment with that negative sentiment, but maybe we will see a rise. But for the moment, market's pretty sanguine, and we're seeing here the dollar index just struggling to get through the cloud on that long-term chart. Interest rates went up last week, of course. And we are just seeing a move back towards bearish. I mean, the long-term and medium-term charts for the dollar are still bearish, and that is a bullish, and that is the theme really for the year. The euro is looking a little bit better on the short-term chart, but still we have lots of big downside targets hanging over us. So that's quite key. Against the dollar, against the yen, we're seeing the dollar falling, and that is just the recognition of the flight to quality. So it's a safe haven is the yen, and we're seeing that dollar falling away. So for the moment, the dollar is looking a little bit bearish. Sterling actually looking better against that weaker dollar. We've got some short-term upside targets, but medium and long-term we've still got these big targets hanging over us. And against the euro, sterling is little change this morning, and we are short-term bullish, but again we've got downside targets hanging over us more than the upside. Against the Swiss franc, much the same picture. Looking at against the Aussie dollar, looking a little bit stronger there on a weaker dollar. And on Bitcoin, we're seeing a little bit of a rise back above the 4,000 level, up 6% today. So that is quite a nice jump for Bitcoin, but it's been a terrible year, of course, for the cryptocurrency. S&P 500 index, as we said, was heavily down. We're now in bearish territory. We need to recover quite sharply to get back above the cloud on this lagging line now. 3 weeks is what I'd normally expect to see. To say 3 bars would be 3 weeks to say we're in a bear market. But at the moment, we've got a lot of work to do to get back to bullish. And of course, medium term, we're very bearish. And until we see a move above on the 60-minute chart, it would be a bit of a mug's game to be buying the market. And the Nasdaq lower as well. We've got downside targets here, still lower, and the Dow much the same picture. So these downside targets hanging over us suggest markets still have further to fall. We are seeing the futures up this morning. The S&P future up just under 2/3%. The Nasdaq E-mini up 0.8%, but that's not enough even on these charts to reverse these trends. So it does look like the US will open higher, but as I say, not enough to reverse the trends. We're seeing here the FTSE 100 index down 0.5% this morning. Again, nudging new lows here. Looking back now, 2-year lows, and the mid caps in the UK also looking bearish as well, down 0.5% this morning. Further downside targets here at 2%. So not a great picture. The DAX is up this morning, and so we are just seeing a little bit of an improvement there. Markets mostly trading half day today, so we're seeing we'll only see a little bit of activity this morning, and inevitably the day before Christmas we'd expect volumes to be fairly light. The CAC Courant is lower as well, down nearly 1%. In Japan, the market heading lower. That stronger yen really not helping. The Hang Seng down 0.4%. And China actually bucking the trend is up 0.4%, but still looking very dismal. I'm seeing Sensex just fairly flat, down slightly. The Aussie market was actually up 0.5%. Brent Crude had a terrible week last week. We see that with a candle here. We've got a slight bounce this morning, but not enough to take any of these trends bullish, so still looking pretty bearish. And WTI is actually down this morning, so we're seeing further falls here. Again, making 18-month lows, so quite concerning there. US nat gas back to $3.77, having been $1 higher, so it's really been volatile, but it's just steadying at these sort of levels. The big story is gold. Gold is up just under 2/3% this morning. A really clear turnaround of the trend here is bottoming out and now rising. Of course, with everything that's going on in the world at the moment, gold looks like quite a safe place. 1302 and 1295 are the short-term targets. We've got these long-term targets, but we really do need to break this sort of 1370 level to break there. Silver also similarly bullish, not quite as clear turnaround as gold, but it is looking better. And US 10-year yields still sitting fairly bearish at about 2.8%. We still do have this one upside target, but the other one that was to 4% has been taken off the chart, negated, and we now have some downside targets. So market's really starting to worry about the growth prospects for the US. And the key thing is we're seeing a cocktail of China trade wars, US government shutdown, interest rate outlook in the US, and so all these things just starting to have a negative impact on markets, and quite hard to see how the market breaks away from that. Just looking at Friday's moves, we saw Apple were down nearly 4%, so they go lower still. You can see a lot of these charts just really coming off very significantly. Amazon were down nearly 6%, and so they were making 12-month lows in the run up to Christmas, so we wouldn't normally expect to see that. And Google were down a further 3%, again making new lows there. Facebook have had a terrible year. They were down 6%, now sitting at 124. I mean, they've nearly halved in value, Facebook, so it's a really key story. And we've still got these downside targets. We've had these for quite a while, 108 and 102. We've quoted those in 105, so it really does look like Facebook has the potential to go much, much lower. Just taking a look at some of the other bellwethers, Netflix down 5%, Microsoft down 3%. So we're seeing really across the board a lot of big moves here. Tesla have actually held up relatively well, and they were up 1.4% on Friday. So they just managed to stay in that bullish territory, having had a pretty bad start to the year. They've recovered some of their poise there. Looking at global markets, we see here just the sea of red. The S&P was down 2%, the Nasdaq down 3%. Just relative to the Dow Jones, we see how the Nasdaq outperformed by 12%, has given up most of that gain, underperforming, and ending up still 2% higher at the year end. And we see here the Nikkei, for example, down 1%. So again, just making these multi-month lows is still very concerning. In Oz, we saw, just looking at the markets here, we've had some pretty big increases. Mind Your Own Business, the accounting software firm, had a terrible week last week, just recovering some poise. OOF Holdings up 7%, but again, the chart's looking really terrible. And then on the other side, and this data all coming to you from Yahoo Finance, on the other side we've got Bellamy's down 3%, Western Global Limited down 3%. So we had quite a lot of big falls there. China, we mentioned, had a slightly mixed picture, but better than most, and had quite a lot of stocks up. Some stocks up as much as 6%. So, but again, the chart's still looking pretty terrible. Hong Kong was mostly down. We did have some stocks up on the Hang Seng. The Nifty 50, we're still seeing updates coming in here from Yahoo at the moment. Bharati Infratel up 3%, but again, chart looking terrible. Tata Consultants and Wipro actually up quite strongly, 1.6 and 2.19. Chart on Wipro is actually held up really well, one of the better looking charts. On the downside, we've got Hero Motorcorp. They were down 4%. So we're seeing here this move and then further lows here. Slight improvement on the relative chart, but has been really quite a turbulent year. Looking at Tokyo, it was mostly down. We saw some stocks up. TDK actually bucking the trend of late, but again, not enough to change the overall trend. We're just seeing that they've been rising last few days. And then if we look at Family Mart, down 6%. They've had a pretty bad few days. Looking across to Europe now, and if we look to the FTSE 100, and we can just rank by performance here. We do have a few stocks up. Micro Focus up 1.7%, Persimmon up 1.2%. But again, the chart's looking pretty bearish. Hashtag Group is breaking its trend, so we're seeing here the long-term trend being broken, and Rentokil Initial. The key thing is Rentokil is actually still in its long-term bull trend and medium-term looking better. So defensive play. And we're seeing how the relative performance to the Dow is just improving there. So that's one of the better ones. Rand Gold, of course, that gold price looking better. That medium-term trend bullish. And again, we've recovered some poise here relative to the market, done relatively well, got good upside targets. So they are out there, just having to work harder to find them. Glencore breaking down, not looking as good. Here we see the updates coming in from Yahoo Finance. Shire down 5.8%. WPP down a further 2.8%. They've had a terrible year. Imperial Brands down 2.7%. United Utilities lower, and Just Eat Group down nearly 3%. Again, a pretty tough year for them. 30% underperformance at one point. They are starting to just redeem themselves a little bit on the relative. That's it for today. We'll take a look at markets, maybe between the New Year, Christmas and the New Year. Have a great Christmas. Until then, until we next see you, happy charting. See you then.